This is John Shealy of the Wall Street Shuffle and the Traders Country Club, and today we're going to take a look on December 1st, the look at the hot list. It's what we discussed on Tuesday and how you can use it for not only day trading, and we're certainly going to take a look at that, but also for investors who are looking for a hot trade, new trade. Let's take a look how you can use that hot list, the top 20, top 25, to spot some good trades. Now I'm restricted a little bit because of YouTube and the size to optimize viewing for YouTube. But here I'm showing you the TradeStation. This is a very popular trading platform. Their hot list, equities. And in this particular case, I'm just looking at the NASDAQ stocks. Percentage gainers for one day. Not over the week, not over a month, but what is hot, what is moving up the most in percent for the day. And this is what we're talking about in regards to the top hot list, the top 20. In this particular case, you're only seeing the top 8. And many of these platforms will sort that the highest percentage of the stocks that moved in percent will go to the top, and as you can see, it drops in value down the list. It's sorted from high to low in this particular example. Now let's take a look a little bit more about what this does. You can see the symbol. Here I have in this particular case the description, so you actually get the name of the company. A lot of times we really don't care, but nonetheless, if you want to know what company you're trading, this list will show you. Now, percentage gainers, here's the last price, the net change for the day, and you can see here the net change percent. Of course, that is the net change versus the prior close of the prior day, and that's going to give you your net change in percent. So let's talk about first how to use this list. Now I'm going to show you one interesting use for this particular hot list. And first we're going to discuss about traders who are not day trading, but maybe looking for some trades for their portfolio. So let me just give you an example. Let's take a look. I see a symbol I don't know anything about, ZN. Now I've removed the name of the company so you can see more information in the small space that we have. Here's the last price, net change. You can see this stock was up 26.31%. Let's take a look at this particular stock. Here you're seeing this is what the daily chart looks like. You can see a big explosive move from the low in this particular stock. Now, does that mean I suggest that you buy this stock merely because it had a big percentage move? Absolutely not. What you do is that you read about this story, ZN. You find out which company it was. Because let's face it, there must have been some very different news, bullish news for this stock to make a percentage move of this basis. That's what you want to do. You want to read the story, see if you like it. If you like the story, like the fundamentals, think it has some lasting power, then you may consider buying this stock as a long-term trade, not a day trade, but a long-term trade. Why would you do that? Because you like the story. Now you're going to go through lots of stocks and examine what made them move. Let me show you another example. Here's a stock that was in the list, SWHC. That is Smith & Wesson. Something that Dan Kofol would probably like to watch. Smith & Wesson, nice little move of 9% all in one day. Let's take a look at the chart. Here you're taking a look at the daily chart of Smith & Wesson. You can see that two large up days occurred in Smith & Wesson. There's something going on in regards to the news story, isn't there, in regards to Smith & Wesson. If you like the news story, like the fundamentals, then you have a potential of liking this particular trade and going ahead and making a buy in this particular stock. Now, this may have indeed been a stock you have never been alerted to. What first brought this stock to your attention? Because it was on the hot list, basically the top 20 gainers list. Made this stock, and you find this particular trade, and that is what got you to look at this stock in the first place. That is why the hot list, let's bring it back in here, can be used to spot some setups, not just for day traders, but for longer term trades. But now let's talk a little bit about how we can use the NASDAQ dollar, or in this particular case, percentage gainers list for the day for day trades. Now, the NASDAQ stocks will start trading and start showing some potential large gap openings or percentage moves in pre-market. So this is when short-term traders, day traders, are first alerted what might be moving prior to the 8:30 Central Standard Time opening. So nonetheless, we're going to be noted at what's going to potentially be gapping up, what's already showing strong momentum, and whether or not that's going to last throughout the opening periods. Let's try to find a good momentum opening here. So imagine if we walked in the morning and we saw this list and we saw biofuels shortly after 8:30 start to rise 10, 15, 20, 25% up. It would be moving up this list as it was sorted because the greater percentage, the more up it would go in this list. So let's say we saw BIOF quickly after the 8:30 opening and we had some interest in it. Let's take a look at the intraday chart of this BIOF. First thing you can notice is here's the December 1st opening. Prices started moving up consistently, rising, rising, rising. This is what suddenly alerted you that there was a lot of buying interest in BIOF. It had a small setback, but then the market started running again. What made you consider buying this correction or playing this next resumption of the up move? It was because it was on the percentage gainers list. What you could do is read the news story. If you like the news, like the price action, then this move is something that you'd play for. Now you can see, well, it's not a very big move, some 10, 20, 30, 40 cents, but on 500 to 1,000 shares, as you can imagine, that would be your pay date. The only problem about this stock is the amount of volume. Here's about 8,000 shares in this 2-minute period, about a little more, about 5,000. Not very many shares, so you'd have to be a little careful about this one. But let's see if we can spot another trade that was moving, that was on much higher volume, that offered perhaps a better trade. Here's another trade. We're looking at SYMX. This would have been on the list. Now remember, it would have been down on the list for after the opening, but it would have it would be moving up if prices started to rise, because this is sorted from high to low. So it would be moving up if the stock buyers were consistent in SYMX. Let's take a look at the intraday chart. Here, taking a look at the intraday chart for SYMX. You may have never heard of this stock. I certainly hadn't, but it was on the max gainers list. They were buying the stock. It must have had a good news story, and you can see, even though the market began to sit sideways and rest, it started another surge, and that's what in regards to this had already shown strong momentum, a little bit of rest, resumption of that buying strong momentum. This is momentum style trading. You want to trade in the momentum of the direction of the market. And of course, it would help to know if this, for example, if this particular stock was setting new highs, breaking resistance, this kind of technical event that would give you a little more confidence in playing from the long side. But let's also take a look at volume. Let's just I put up 2-minute charts so it'll fit in our small screen. As you can imagine, some traders trade off of 1-minute charts, some tick charts. 2-minute, 3-minute charts are certainly popular, some 5-minute. But this is a style of trading that normally you want to take quick profits, so you normally have very short time periods. But let's take a look at this. For example, here you're seeing 14, almost 15,000 shares during this little 2-minute period. Let's take a look at this little bar. This is a pretty strong buying. Let's see how many shares. 54,000 shares traded during that 2-minute. Now that is volume that you like to see. That is volume you can trade with. You could actually buy 1,000 shares easily anywhere in this as the market began to resume the direction of the bullish surge that first was alerted during the morning. This isn't much of a move, admittedly. 10, 15 cents was possible, but that's what we're talking about. On 1,000 shares, that's $100, $150 in about a 5-10 minute span. That's momentum style trading. When you find moves like that are even more explosive, that's when you can look at buying 1,000, 2,000 shares, assuming the volume's there. But this is how you can use the hot list in the morning. You can use the hot list, see what they're buying, see if you like the story, if you have time to read the news, and play that momentum move as long as it's there. If the big engines, the stock indexes, are also moving up, meaning the Dow and the S&P 500 and the NASDAQ, if they're moving up, you even feel better about buying these momentum trades. Lastly, you can use this same methodology for longer term trading. You can look at this market at the end of the day and put on positions to last 1-2 weeks, if not even longer. John Shealy with the Traders Country Club.